Welcome back, everybody, to Cryptocurrency Weekly, where I keep you up to date on what's happening in the cryptocurrency space. From technology updates to the latest news, we have you covered. So if that's something that interests you, please subscribe to the channel and give the video a thumbs up, and please comment your thoughts below. This channel is for information purposes only and is not investment advice, nor is it buy or sell signals. This is my opinion, and that is all. So with that out of the way, let's get right into it. So first up, two Bitcoin price indicators suggest BTC has not bottomed yet. Traders are using a variety of strategies to determine whether Bitcoin price has bottomed, but on-chain activity and derivatives data hint that the situation remains precautious. Traders are using various strategies to determine whether Bitcoin price has bottomed, but on-chain activity and derivatives data hint that the situation does remain precautious. Has Bitcoin price bottomed yet? According to Bitcoin's derivatives and on-chain data signal that further downside could be in store. Traders have been trying to time the much anticipated trend reversal ever since Bitcoin initiated its 48% correction all the way down to $30,000 on May 12th. The move culminated with $12 billion worth of futures long positions being liquidated, and to date, traders' confidence remains somewhat dampened. The community started looking everywhere for trend reversal signs, including technical patterns, United States CPI inflation data, and Bitcoin exchange deposits. For example, some analysts stated that a higher high followed by a move above 40,000 would be enough, as stated here by Immortal. However, 2 days later, Bitcoin managed to break through 40,000. Although the move didn't last for more than 6 hours, meanwhile other traders inferred that a retest of 30,000 is needed before a bounce. Although there could be empirical evidence or even logical backing those statements, market prices don't always react to external news or previous chart formations. And also, guys, as this article states, it signals that further downside could be in play. And yes, this is obviously true, but you're never going to time the exact bottom, and you can never buy the exact bottom with any meaningful size of money anyway, okay? I am not a huge fan of timing the exact bottom of markets, okay? Because for one, you can never do that anyway. I also disagree with this about on-chain metrics stating that, it's not looking good for Bitcoin. I mean, if we look at here at Grayscale's Bitcoin Trust, you can see that they've been accumulating more and more Bitcoin with every passing day, okay? So throughout this dip, throughout everything, they have continued to accumulate since May 12th. Okay, so since May 12th, they haven't stopped. They've just keep buying. So smart money continues to pile in. All right. Now, we're currently 47% down from our all-time high at the moment. You want to be buying when there's blood on the streets. Okay. Now, if we look at historical corrections in Bitcoin, despite being one of the world's best performing assets, Bitcoin has suffered plenty of massive price drops. From government bans to hacks-induced crashes, that's how these corrections compare. Now, you'd be hard pushed to try and find a bad time to buy after Bitcoin has crashed by these significant amounts, okay? It's not always the best time to buy, but it's not the worst time to buy either, okay? So I'm continuing to accumulate Bitcoin. I'm not scared in the slightest, not even a little bit, about further downside. If you're an investor like me, you should be pretty happy when the price of an asset goes down because you're able to get more of it at a cheaper, more attractive price, okay? Now, in my opinion, Bitcoin is extremely oversold, okay? It's been overly beaten down given the risk profile of the asset compared to other large and more stable coins and that sort of thing. So Bitcoin shouldn't be getting, outperformed by other large caps in the space. So Ethereum hasn't dumped as much as Bitcoin has over the last month. Bitcoin has been one of the worst performers relative to the other large caps. So I'm of the belief that now is as good a time as any to start dollar cost averaging into Bitcoin aggressively, okay? I for one, don't care if it drops another 10, 20%. A lot of the mainstream media is stating that a drop back to 20,000 is likely, okay? Now, one thing's for sure, if these clowns on CNBC say that it's going to drop to $20,000, I'm pretty confident that is definitely not going to happen, okay? So instead of worrying about timing the exact bottom of an asset, You just need to get in close enough, okay? So even if Bitcoin drops to 25,000 from here, in 6-7 months' time, I don't think it's going to matter at all. You're not going to care whether you got in at $30,000 or $20,000 when Bitcoin's up to $150,000, okay? This consolidation and this crash was probably needed. Sentiment was a bit hot, okay? So don't be scared. If you're a long-term investor, don't fall for it, okay? I believe further upside is just around the corner. We might consolidate here for a few more months, which just gives you more time to accumulate the asset, okay? And the FUD just continues to pile on, okay? I've seen ridiculous things on the news and on social media and coordinated FUD that just makes absolutely no sense. So I'm going to play you the next clip of how we're all going to die if Bitcoin is adopted as a global reserve asset. So this should be quite entertaining to watch, and I'll explain to you afterwards why this is absolute nonsense. Take a look.
It's more dramatic. It's not even a question. They have, and they will have literally no power to do that except for those who are holding their currency. So if I have a cryptocurrency, it's outside the system. There's no controls by the government.
And Zhujiang, can you give me the worst scenario? What kind of a systemic shock it will give to the current financial system is if Bitcoin is widely used in China or the rest of the world?
Well, if Bitcoin will become the ultimate type of a form of the currency then adopted by human society, I can tell you exactly what's going to happen as the worst scenario or the must scenario. We're all going to die. This is not a joke.
Why do you say that?
Yes, Bitcoin has a very strict limited number, the total number. So which means this is a deflation currency, which means the currency would not grow its amount alongside with the growth of a human economic development. That means we're going to see our society going on the death spiral of deflation, and the business sector will withdraw, and we're going to see people's jobs going to be wither away, and then whole society is going to shrink and then self-explode. That's what happened in the end of the Ming Dynasty when they're short of the silver. It also happened.
I mean, this clown here on CGTN just is completely disconnected from reality. We are living in a very inflationary environment worldwide right now, with governments printing trillions and trillions of dollars due to COVID, which has increased the cost of living by a fair bit, which means that all the dollars that we've earned from our work is becoming less and less valuable over time, destroying our purchasing power and creating more class separation among society. But somehow a deflationary currency, which isn't controlled by a very few amount of people to benefit those that they see fit, is somehow a systemic risk to society and is going to kill us all. I don't need to explain to you how ridiculous that is, but that the fact that no one can steal the money that you've earned is somehow going to destroy society, okay? This is a part of what makes Bitcoin an extremely attractive value proposition, all right? It isn't an inflationary currency. Your time can't be stolen, because that's not okay, okay? With the fiat-backed currencies of today's world, your time on this planet and your free time is stolen due to them inflating the money supply, okay? You don't need to be a genius of when the Federal Reserve tells you that what you are earning is denominated into infinity, all right? You don't need to be an extreme mathematical whiz to realize that money is worthless, okay? Why would you store your money in something that can be printed to infinity, okay? Whereas Bitcoin has a hard cap supply and is inbuilt scarcity, which is a huge part of its value proposition, okay? So up next, we're going to chuck on Plan B, which was infamously created the Bitcoin stock-to-flow model, and goes through the value proposition of Bitcoin's scarcity amongst other scarce assets in the economy. Take a look.
That drives the value. That's true for real estate. That's true for gold. That's true for Bitcoin. And actually, there are not much valuable or very scarce valuable things in the world besides gold and real estate and Bitcoin and silver. There's really not that much. Maybe art, maybe diamonds, but
Sure.
that's it.
Yeah.
And so the second question then is, how do you quantify scarcity? How do you measure it? How do you put a number on it? And of course, that's where the idea from the gold market community came, to measure it in stock to flow. So stock to flow is also very simple. It's how much of an asset is there above ground. That's the stock, and how much is produced every year. And then you just divide it. So for gold, it's 60. Stock to flow ratio is 60. So there's 60 years of gold production above ground. And you have to think about that. For example, oil has a stock to flow of a quarter year, 0.25 years, because all the oil is used right away. It's not stored. It cannot be stored. It's very difficult to store. There's some strategic military reserves, but the oil is used. And if the stock of a thing is less than the yearly production, then of course the power is all with the producers. And that's what you see with oil. You know, the OPEC and all the cartels are very powerful. And it is very difficult. And Seyfried Ammous writes about this very eloquently in his book, The Bitcoin Standard, which is a
wonderful, a must read. Yes.
A must read. And so he writes about how difficult it is for an asset, for a thing to move beyond the stock to flow 1 number. So oil has 0.25. There's also platinum and palladium, for example, which most people think of as very scarce assets. They are not, actually. They have stock to flow ratios of around 1 or less than 1, because all the platinum and palladium is used in cars. So for an asset to be hodled, if you will, to be saved and not used in the industrial things, it has to be seen as sort of money or something. And that happened, of course, to silver.
Right.
It happened to gold. It happens to Bitcoin now. It certainly happens to real estate, because, well, what else do you put your money in these days?
Of course.
And art is, of course, also a very, very interesting store of value, as they call it. So, well, that was the second step. Stock to flow was the quantification of scarcity. Very easy, very simple, very easy to measure, not only for Bitcoin over time, but also for other assets. And that's where that was the third step, just linked the historical stock to flow of Bitcoin. That goes up every halving, especially every 4 years, it doubles. And I linked the stock to flow with the price, just simple. And if you put that in a chart with stock to flow on the x-axis and value or price on the y-axis, and do that in a logarithmic scale, so that's very important. But it's just a transformation. So if you put those two numbers in a chart, you see this straight line, which is amazing. It's just. I know I saw that chart for the first time. It was like a eureka moment. It was like, this can't be true.
I bet.
Because that would mean that also for future halvings, when the stock to flow and the scarcity of Bitcoin would increase, that the price would also increase.
Very, very interesting. So if you want to find out more about the stock to flow model, please follow Plan B on Twitter at 100 trillion USD. Fantastic analysis on the stock to flow model. So moving along, Apple is headhunting a business development manager with experience in cryptocurrencies. So it seems Apple is moving forward with its plans to adopt cryptocurrencies. The giant is now seeking experts from the fintech world, including cryptocurrencies. In a recent job post, the company is now looking for a business development manager for alternative payments with experience in several fields, including cryptocurrencies. The key qualifications require at least 5 years of experience working on alternative payments providers such as digital wallets and crypto assets. Candidates will be responsible for the end-to-end business development and launching of new programs in the fintech products. So guys, this just continues to show you that yes, we might be in a bit of a downtrend at the moment, but the outlook for the space is bright. We've got big institutions and now Apple coming in. This is only going to increase the adoption of the crypto assets such as Bitcoin, making it easier for people to get a hold of the assets. Okay, so that's it for today. Hope you enjoyed today's episode. Please don't forget to subscribe to the channel. give the video a thumbs up and comment your thoughts below. Do you think we're going to see further downside in the cryptocurrency market? What do you think about the current market structure as a whole at the moment? Thanks very much, everyone, and I'll see you next time.